Good day everyone. Good day ma'am. I am Marlo T. Banwag, Bohol Island State University, BSHM 2B. So today we discuss our topics in chapter 6, which is organizations for finance. So we have our learning objectives. First is discuss the different functions of banks. Second is we discuss the different kinds of credits. Third is we discuss the information of source and financing opportunities. Fourth rather, is the different source of credit information. And lastly, but not the least, is uses of credit information in the Philippines. So next, we have our outline. So, financial function. Year part, the capital pool, savings and investment, financing and non-corporate enterprises, initial corporate and financing, financing day-to-day operations, financing social business. Part 2, different functions of banks, short-term financing rather, trade credit, secured borrowing, unsecured borrowing, paper and notes. In paper and notes, we have two types, acceptance financing and commercial paper. Cap-debt financing. Third is immediately term financing. We have long-term financing. We have debenture and bonds. Four rather is of bank financing. We have petty cash, paying for good purchased, maintaining bank balance, and maintenance balance for estimating cash requirements. And also there are parts also in estimating cash requirements. First is for employees payroll, for utility service, and to current purchase, and non-routine expenditure. 5 is the company commitment. You have the budget, the purpose of budgets. The purpose of budget, there are 3 types: planning, controlling, coordinations. 6 is uses of credit information in the Philippines, the informations of source on opportunities, and also the short-term borrowing. So we discuss the definition of finance function. So when you say finance function, a finance function is a part of financial management. Financial management is the activity and concerned with a control, planning, and financial resources. And also in the business of finance functions involve acquiring and utilizations of funds necessary for the efficient and corporations. Finance is it's about lifeblood of the business. Without it, the things that we should do smoothly. It is the source of run and any organization. It is provide money and also acquired to the companies. So there are some information of the financial function. So when you say financial, it is essentially concerned with the management of monetary affairs, with the raising and expending of money. And also it's not maybe in the dramatic functions and also the manufacturing or a sale, but it is equally important and very often and direct handling for retained by staff of management. And also the chief financial management officer may be called the president for finance, or a treasurer, or the controller of, depending on the practices of corporations. And also the chief is the financial officer handling the cash, the bank of relationship, and also the credits, and the quite of accounting to be the functions. He also prepared or to help people to pay or to give you a budget of money, and also the annual report for the stockholders, and the payroll for the confidential payrolls. And also it's involved the financial matters that the owners of a sale or the purchase of property. In a bigger information or corporations, ye are both treasurers and the controller, it may be encased if a treasurer handling the external of finance or finance, while the controller will be handling an internal finance. So in order that we have informations that we are gathered and information to success decisions to advise in a good declarations. So next we proceed the capital pool, that is savings and investment. So savings are general direct and indirect by individuals, business enterprises, and a variety of institution, government, and others. These savings flow into the capital pool or market through money channels. So as you can see, my slides, we have the example, we have the investment and saving. So when you say investment, it is an act of buying an assets like qualities and also the fund and unit of investment, trust for funds, and also the mutual funds. We have the real estate of other types of investment with the exceptions and the value of grow and over time. While the savings is an act of putting money aside and typically into a bank account. That is my example. Next, we proceed financing and non-corporate enterprises. In the partnership, the initial capital comes from individuals, indirect and interested, and also through the loan investment that friends are willing to make it in the business. Next is initial corporate financing. So it means that it is a corporate enterprises. It is most concerned with the problems of capitalization, commonly employed in corporate rather, and the financing are willing to cooperate the securities such as the stocks and bond. Third is financing day-to-day operations. Once a business is started, the money requirements of the company are continue for goods, wage, and other expenditures are going to concern. Everything of a business does a result in money coming from or in going out or in property being brought or sold. Fourth is financing seasonal business. It means that quite of a number of a business and also a seasonal in nature. It is a summer hotels like instance for highly a seasonal business. We are unless it is located in the high area or a tourist spot or a beach resort in territory. Is that the business during the rainy season? So next, we proceed to different functions of banks. Banks, we have two functions. They act as a middleman between saver and investor. That is between the supply of demand for capital and they are supply for principal means of paying the modern communities. Credit banks, if the bank system is working properly, the middleman functions should bring about continuous and equilibrium between the volume of savings and the volume of investment. We discuss a short-term financing. So it means that traditionally is used for seasonal purposes. For example, to build an inventory for the privilege of borrowing against the bank's credits. There are four. First is trade credit rather, the normal credit form extend for a firm their suppliers. Second is secured borrowing. So it means that it's provide more money to most companies and also than trade credits. A secure is a loan involves the borrowing against from account of reservable inventory and equipment and vehicle constructions, buildings, and contract of some types. Third is unsecured borrowing. It means that it is a short terms of loan, lines of credit, and in revolving loans, those are called unsecured loan. The only is a sense of they are not tied, but specific is the assets of a group assets. The fourth is the paper and notes. It means that it is a short of money and also it's available through three names or a paper name of various types. So next is acceptance of financing. The most common such as a paper which can be used as an example of bankers. Acceptance is to borrow the money through the mechanism and the borrower arrange a line of credits, and also the banker or the issues is a series of notes payable in 30 to 100 days, 180 days rather. So number 2 is commercial paper. So commercial paper is a form of unsecured, a short-term debate, and also it is commonly used by companies to finance of their payroll, payables, inventories, and the other short-term liabilities. And some of majorities are commercial paper are arranged from 1 to 270 days with an average of around 30 days rather. Commercial paper is an issue at a discount of a nature or mature at is the face of value. Next, we discuss a intermediate term financing. So it depends on a large measure upon the predictions of the business climate, the company operations, and the cash flow. So as you can see, this is my example, or as you can see these pictures, it is a leasing, and this has become a significant source of intermediate term of financing. It is a small companies and rent of year. Virtually, a type of fixed assets may be in the financing through a leasing arrangement. Leasing can be accomplished through the company commercial bank and also the equipment of owner or the commercial financing company. So next we proceed the long-term financing. So there are 5 resources. First is equity capital. Second is reference capital. Third is debenture capital. Fourth is term loan. 5 is retained earnings. So long-term financing can be defined as a financial instrument with a majority of 1 year, such as bank loan, bonds, leasing, and other forms of financing. And also, it is a public and a private equity of instrument. So, as you can see in my slides, this is the example. They have the low, high, and the highest. So next is maintaining bank balance. In a banking, the minimum of maintenance balance is the smallest amount of money that the depositor has kept in a bank account, and also to avoid the paying a certain fee. There is no standard money for the minimum of maintaining balance. It can vary between the banks and also not may be the same for different account. There are types of bank also. So next is estimating cash requirements. How could a treasurer know how much money to be required at the stated time, and also in order to have a needed for funds available? How could a treasurer determine the amount of needed for retained explanatory as accountable payables, utility charge for light, gas, power, and also the telephone and telegram? The routine purchase for the non-routine explanatory, there are ready to know the factors of expenses which help to determine the cash requirements. So there are 4. First is for employees for payroll rather. This is the one of the first routine explanatory of the company. The payroll have to meet every week and every 15 or in the end of a month. Second is for utility service. usually utility service of telephone, telegraph, light, power, and also billed and paid monthly. This is the cash requirements can more or less for routinely predetermined. The third is for current purchase. The next is invoice purchase. If a treasurer is consolidate before the purpose purchase are soma somakunlated, how will the advance of a voice or invoice rather will be due, it can plan accordingly. And also the company is making for the commitment without a treasurer approval, since the treasurer in one of who has to provide for the cash to pay the bill, and also it's a reasonable that treasurer that he could know or ahead of time to payment the company commitment. It is the feeling of responsibility that is the person who has toward the goal, mission, vision of organization he or she associated with a high level of employee. Satisfactions in organizations are related to work and commitment and engagement in their organization. Next is the budget. A budget is a statement of objectives in terms of specifications. It is a set of goals to be attained in a sales, expenses, productions, manufacturing, and profits, and so on. Next, we proceed the purposes of budget. So the purposes of budget, there are three. First is planning, controlling, and coordination. So when you say planning, it is a systematic and unified plan of activities for designated periods of operation. Second is controlling. Controlling means or control. It means that the standard of measurement of a result wins against which is the variation from previous plan become evident. The third is coordination. Coordination means it is an activity become a part of plan for the enterprises as a whole, and also dramatic purposes or processes, which is can be a basic constructions and operations of budget, and also to tend to bring understanding and identifications of departments and personnel. Uses of credit information in the Philippines. Our financial system now operates on the basis of huge amount of information concerning a large and medium scale businesses units, governments units, domestic and foreign, and also many other institutions are that actual potential and participants in financial markets. The basic data came from many sources and published the balance sheet and profits and losses statement report to the Securities and Exchange of Commission and also the other regulator security and exchange the commissions of the government agencies, reports to the stocks exchange, the special investigation, and so on. It is important because it's the impact of many areas of your life, such as the ability to rent an apartment, to buy a house, to get a car, or to get a loan, or even though they can hard for a certain jobs. Next is information sources on financing opportunities. We have a short-term borrowing. So when you say a short-term borrowing, it is the most important source, and probably on a loan up to 10 years, it is the company bankers. It is from the person or from the more supplicated bankers to the company or own bankers. It will be reduced, while the financing officer that has the officer can be learned with one exceptions. So second is useful. So when you say useful, it is an up-to-date information on the long-term borrowing may be obtained from the corporate financing departments and of any monies center bank of, and also from the smaller department of office that we are in regional bankers like broker rather. Then third is advice of placement and guilt if is available from the members of underwriting interpreterity. The fourth is in the area of background reading, excellence practical and occasional papers of disseminated and leading of the banks and underwriters. Number five is explain full and differences between stocks and the bonds and the reason why one or not other is issued and how their issue is regulated. So we have an example of a short-term financing. So there are types. First is line of credits, or it means that LOC. Second is short-term bank loan. Third is bank overdraft. Fourth is merchant cash advance. And fifth rather is invoice financing. And lastly but not the least is payday loan. So we are the combinations of the short term and also the long term. The short terms is short term bank loan, bank draft, overdraft rather, trade credit, factoring account. Before we're gonna end our discussion, I just want to read a quote first. Financial freedom is available to those who learn about it and work for it, by Robert Kiyosaki. That's all, thank you. Secured expenses issue commercial paper, while a long-term financing is issue shared issue of bonds. Long-term bond loan uses a retained profit and hard purchase and also leasing.